Now, what in particular that I like about this stock is a couple things. First of all, we can draw a horizontal line and see that it wasn't too long ago that this stock broke out above resistance of a sideways range. You can see this is called a trading range. Yeah, adjust that. There you go. So from July of 2010 all the way until March of 2011, this stock was in what's called a trading range, just moving sideways, not really moving up, not really moving down. Now, when a stock is in a trading range, what happens is notice how these moving averages cross over one another back and forth, and they don't really prove anything. That's because moving averages are indicators of trend. So when the price started moving higher, notice how these moving averages separated apart. And in a healthy stock, this is what we'd like to see. The 20-day above the 50-day and the 50-day above the 200-day. Now, the key defining moment here in this chart is right here, the day that this stock moved above the high of its range. Notice volume picked up a little bit. The volume started trading more shares than before, but not significantly. And then the stock went sideways again. It consolidated. Again, notice our consolidation here, but a shorter consolidation this time. Notice this time the consolidation was only about 1 month, actually about 5 weeks. So here we had a long period of consolidation. Now we have a shorter period, and then the stock broke out again. So what this is telling us is that we're seeing increasing buying interest in this stock. Specifically, above all, what we like the most is this volume spike today. Notice how the volume spiked. It shot up to 175,000 shares. And the average it was trading was like just 1,000 shares, a couple thousand shares. And over the past 4 days, notice how the volume has been increasing. And today, it traded its highest volume that the stock has ever traded. And that volume coincided with a big move as well. So when we see volume like this, volume is the key to stocks moving. Okay, volume is like putting your foot on the gas pedal of your car to make the car move. Because without volume, the stocks don't move. And if they do move without volume, the moves can't be trusted. Volume is important because it indicates what institutions such as mutual funds and hedge funds are doing to support the price of the stock. So tomorrow we would closely want to watch this volume to see if the volume stays strong or if the volume pulls back. Now, we probably don't want to buy the stock right here because it is pretty well extended away from support in the near term. But what we'd like to see now is a pattern where it forms what's called a bull flag. A bull flag looks like this. And basically it's a pattern where you get the price moves straight up. That's right here. That's the flagpole. And then the prices drift lower. So what we'd like to see now is if the price has drifted lower over the next 1 to 2 weeks, that would be forming a bull flag. And then our buy signal is right here when the price of the stock moves above the high of this downsloping channel of the bull flag pattern. So that's one to keep an eye on if you're trading the Indian share market. Keep an eye on the stock. Again, you probably don't want to buy it here, but watch for the development of this bull flag pattern. It's really got nice volume to support it, and this is looking like it has the early signs of becoming a leading stock. Now let's look at another one. This is NSE, Nesco. And what we like about this one, again, in case you didn't notice, is the volume. Take a look. Out of nowhere, volume just starts coming into the stock. Now you might be asking, well, what's the reason for the volume? What's the news? Well, the truth is, with our strategy, we don't care what the reason is. It doesn't really matter because for one reason or another, people are buying the stock. And if they're buying the stock's going to go up. We don't care why. The reason why doesn't matter. We're not fundamental traders. We're technical traders. So it doesn't really matter why the stock's going up. But what we like here is that this stock is breaking out as well. We can draw a horizontal line here. And we can see right there from that horizontal line that the price is about ready to break out again. So we had a big move, and the stock went from about 530 to 630 in 1 day. That's a big move. It's about a 20% gain in one day, which is exciting. We typically actually only look to make about a 20 to 30% gain in the stocks that we recommend, the stocks that we discuss and analyze for our students. We typically look to hold 2 to 5 weeks, so we're not long-term buy and hold forever, but we're not rapid-fire day traders either. We typically hold, like I said, several weeks and look to make a 20 to 30% gain on average. So a stock like this, if we caught the breakout move above the high of this range, we'd already be looking to sell just a couple days later. But now it's probably going to form again a bull flag pattern, which we want to be on the lookout for. And then if it moves above the high of this horizontal line, again, we like it for potential buy entry. And then we've got one more to look at here. This is Bata Limited. Now this is an example of a stock that's already in a steady uptrend, but I like this example because I can show you the power of the 20-day moving average. Again, notice when the stock was moving sideways, the moving averages kept crossing over each other, and they didn't really mean anything. But once the stock starts trending higher, notice how the moving averages separate. They widen apart. And now every time when the stock goes up and moves sideways and consolidates, then this 20-day moving average rises up to meet the price right here, meet the price of the stock. And then it goes up again, pushes the stock up again, goes sideways, 20-day moving average. Now what we have here is we have something called an intraday undercut. That means the price at some point during the day went all the way down here, but then the stock reversed sometime during the day and closed near its highs. That's a very bullish sign, and it washes out all the people who sell at the first sign of weakness. And notice how the 50-day moving average perfectly caught the price of the stock. So now we have it trending steadily higher. So this is not a time where we'd buy the stock right now, but on the first pullback to this 20-day moving average, again, the stock would be a potential buy entry. Notice how strongly trending stocks typically find support at their 20-day exponential moving average. And if they don't, then they find support at the 50-day moving average. And when I was a new trader, I was afraid to buy these stocks that were up high because I thought, well, I'm going to wait for it to come down lower. But the truth is the stocks that are up the most are the ones that typically continue higher because no one's selling them. So we like to buy high and sell higher rather than to buy low and sell high.